Good evening, dear colleagues. As always, it's Sunday. I'm Dan Strelkov, and this is the ForexTimes project. Today, as usual, I invite you once again to join the ForexTimes community, where you can see unique forecasts based on data from the Chicago Mercantile Exchange, strategic target levels that are hit by price with a high 85% probability, as well as triangles, which are penultimate waves, and the median line of the triangle, which is also a strategic level. You will also see trading signals and receive individual consultations from me personally. So please join the community. You won't regret it, and I'll be very happy to have you. Now, let's get started. As usual, today we'll cover EUR, AUSD, gold, and the SP 500 index. Let's start with EURUSD. According to CFTC Commodity Futures Trading Commission data, we see a 14% reduction in buyers and a 2% decrease in capitalization, indicating that the downward corrective movement is likely not over yet, even though the overall trend remains bullish since buyers still outnumber sellers. However, the decrease in buyers by 14% is worth noting. Additionally, pay attention to the accumulation of call option contracts totaling $144 million, as well as put option contracts totaling $149 million. In fact, option contracts are primarily used by Chicago professionals to hedge their futures positions, and these options are typically located below the price. When the price reaches these option contract levels, we often see reactions as professionals enter the market with their large futures contracts. When call and put options accumulate at the same level, that level becomes very strong for the price, acting as a magnet. I'll show you an example of how this played out during the past trading week. Last Sunday, during a lecture for VIP community members of ForexTimes, I talked about a level where there was $195 million in call options and $200 million in put options, and mentioned that there was a high probability the price would move towards this level. The price hit the level and then bounced. Now let's break down Euro to USD using Elliott wave theory. Most likely in the first corrective wave, we have an impulsive structure, and the third wave is extended into a 5-wave formation. We can never be 100% certain, but based on this, it appears that the correction is not yet complete. If someone tells you that the price must do something or says, "I know," then believe me, no one knows for sure, and the price doesn't owe anything to anyone. The person who says "I know" usually doesn't. If they get lucky, they'll try to spin it to their advantage. And if they're right, they'll say, "See, I told you, I knew." But in reality, no one knows, and the price doesn't owe anything to anyone. Now, friends, theoretically, there's a very nice impulse here, followed by a correction. But we know that in any movement where there is an impulse and a correction, an impulse follows the correction. Therefore, this wave should look like an impulse. Actually, in this case, saying should make sense because according to Elliott wave theory, after an impulse wave in the AB corrective structure, if there's an impulse in wave A, there should also be an impulse in wave C. Otherwise, we're simply misidentifying wave A. That said, it's impossible to force an impulse into this situation no matter how hard I try, though I haven't spent much time trying because the zigzag here is obvious. As a result, we expect the formation of a flat corrective wave. Specifically, it's the 3-3-5 structure, 1, 2, 3, 4, 5. So we have a flat, a zigzag, and an impulse forming a 5-wave structure. If we look at the hourly time frame, we can see this structure, impulse correction, and another small impulse, which will most likely reach the 1.1120 level. So the plan for the upcoming trading week is to test the 1.1120 level. After that, we should see an impulse, a correction, and then we can set sell orders at the next appropriate level. Keep in mind that we are still dealing with a triangle, and the entry into the triangle happened from bottom to top, which means the exit will also happen from bottom to top, and we are currently in the third wave of this exit. Impulses typically suggest a 5-wave structure or a triangle. Therefore, it's very likely that we are in an upward movement. But where there are triangles, we must always anticipate corrections. This means we could see a simple corrective wave A followed by WXY, and we're still missing wave C. When dealing with triangles, we often need to expect such a structure unless the local maximum is broken. Once it's broken, we can disregard this scenario. So why am I saying all this? Because if after the 5th wave forms, we see an obvious correction of 1 to 2 to 3, followed by an impulse, then we are reversing, we would see an impulse, then a correction, and we would place buy stop orders. So pay very close attention to whether we see an impulse here or a clear correction. Only then can we consider buying. Consider. Gold, friends, no matter how much it rises, the triangle is still with us, and it will remain for quite some time. The triangle, as you know, is the penultimate wave, and therefore the exit from this triangle, likely a final diagonal triangle at the moment, strongly suggests that we should only consider sell positions. Additionally, the strategic levels published in the ForexTimes community are all below the current price, plus attention. We have a new strategic level with a significant concentration of put options totaling $1.2 billion in a strong support range. This range includes the hedging of put options with their premiums and the market maker's loss level. Also, there's another strategic level of put option contracts amounting to over $1.1 billion, but I won't go into detail here as we already have enough strategic levels below the current price. So, the recommendation is simple. Take any trading strategy you have, use any patterns for entering the market, and if your strategy says to sell, then sell. If it tells you to buy, don't buy gold right now. The reason is that even based on CFTC data, we are seeing a decrease in buyers, though it's less than 1%, but it's still a decrease. We received this information earlier in the week, and though we saw some growth on Wednesday, Thursday, and Friday, this is what's called a small divergence, a mini divergence between the CFTC data and the market itself. As a result, there's a strong probability of further decline. Personally, I'll be working with pin bar patterns, liquidity management, and placing sell stop orders after identifying impulses and corrections. Let's also take a look at the divergence in the Elliott waves. Indeed, we can already see divergence between the potential 3rd and 5th waves of the final diagonal triangle. So we have wave 3 here, and now we're in wave 5 with divergence appearing. Hence, if any patterns for entering the market emerge, feel free to sell. Again, I invite you to join the ForexTimes community. You'll find that strategic target levels have already been published for nearly all trading instruments. For example, even the Australian dollar will likely hit its strategic target level in the upcoming trading week. And we're also expecting an update for oil soon. As for the Canadian dollar, strategic levels are available for that as well. Join the ForexTimes community, and I'll personally show you where the large accumulations of option contracts are for the Canadian dollar and where it's likely headed over the next year, maybe even a year and a half. So to sum up, sell gold. And as for the S&P 500 index, there's a strong chance that the upward movement will continue since the correction has occurred and has not turned into a full 5-wave structure. Most likely wave 3 is still being extended. After that, we will likely see wave 4, then wave 5, followed by a correction. Only after this will we make a decision regarding purchases. Based on the data from the Chicago Mercantile Exchange, the 5,975 level currently looks quite promising. What's more, the professionals have revised their expectations upward for put option contracts on monthly options. They also revised them very significantly on weekly options. It seems the professionals' patience ran out, and by Thursday morning this past week, they had adjusted their expectations upward. Therefore, at the moment, professionals are supporting a price increase for this trading instrument. One interesting note is that there are 1,389,000,000 clean put option contracts at the level of maximum open interest for put options. This is a very significant level to remember. However, we probably won't see this level play out in the near future as we expect the uptrend to continue. Well, friends, thank you very much. Regarding the S&P 500 index, if you are buying, you might want to hold on to your positions. However, in my opinion, it currently looks more favorable for selling. The target level for a sell is around 1970. As for gold, even if you try to aim for the nearest strategic target level, which is 800 points, I believe that with a single trade, you could potentially earn half of your monthly target in terms of percentage. A very good result is usually around 10 to 12% per month, which is a super result. For those who trade in points, I think you could close out your monthly point target in one trade with 800 points on gold. Regarding euro to US dollar, I want to emphasize once again that if scenario 2 plays out, which is a further decline, then I can say that the strategic target level at the bottom can be defined around 1.0470. The reason is that there is a significant accumulation of put options at that level, around $1 billion here, $1 billion there, and $1.2 billion as well, totaling around $4 billion in put options below. This is quite a significant accumulation. Of course, if these $4 billion were concentrated at a single level, I would be shouting loudly to sell toward that level. This type of accumulation happens rarely, perhaps once every 1.5 to 2 years for EURUSD or GBPUSD. I clearly remember 2 years ago, there was a similar accumulation of $4 billion in put options about 400 points below the current price. I told everyone to watch that level, and over the course of about 2 to 3 weeks, the price hit that level perfectly. Well, friends, thank you once again. I traditionally invite you to join the ForexTimes community at the end of my lecture. Come join us, you won't regret it. Have a great evening, and goodbye for now.